Alrighty, folks. During the week, during the daily financial news, I shared an article from a doomer who was basically saying that we are in for a hard reset. Hold on to your hats. We're going lower, lower, lower. I told you I was going to send that to Mr. Dan Bird, which I did, and he has his retort. He's gone through the article. He's going to share the article, and we're just going to look at how bad things are going to get. Mr. Dan Bird, thank you for doing this for everyone.
Sure. Did you call him a doober?
Yeah, I did. I called him a doomer.
What is a doober?
Doomer.
Oh, doomer.
Doomer.
I heard,
Sorry, there's
I
no
heard
B.
doober. A
Yeah,
doober.
doomer. Doomer.
Like he's doing doobies or something.
Maybe he is.
Yeah, so let me share my screen real quick. We'll get into a few things on this. Not a bad article. I mean, the guy is a technical analyst.
That's what intrigued me is he was a technical analyst, which is where I would put you on the list. And I'm like, well, let's have somebody I trust look at this and tell me where right and wrong. Because yeah, thank you for this.
The first, first, this is my website. If anybody wants my newsletter, which I put out every week, and it's free. Just go to breakpointtrading.net and click on this button, and you can download the newsletter. So the article, it's right here. Stock market is headed for a hard reset that could take years to recover from. So the first thing that I think when I see an article like this is, well, I don't disagree with that headline, but what's the time frame?
Okay.
When is he saying this is going to happen? If he's saying, sometime in 2029, the market will take years to recover, then I would wholeheartedly agree with him. But so that's what I was looking for when I went through this. And he does say something in here. It says, defensive assets, precious metals, energy stocks, industrial stocks, areas typically do well in the late stage of a bull market. I'll show you something about that in a second. Inevitably followed by a bear market or a financial reset. Well, duh. You have the end of a bull market, then by definition, it's followed by a bear market, right? That's how it works. Investors are likely heading into another bear market, similar to the ones that followed the dot-com and 2008 financial crisis. I don't necessarily agree with that. I don't think we have this. I don't think we have the same setups that we did then. Yes, we could certainly go into a bear market. I think we might next year. I don't think we will this year. We'll have a short-term pullback, which I talked about in the last video, but we're not going to have something like the dot-com or the 2008 financial crisis yet. Okay. I think that will come, but I think it's still a few years off. And I think what will probably precipitate it is the debt.
Yeah.
That our government is running up.
Continues to accumulate at $1 trillion every 90 or 100 days. That's wild to think about.
Yes. And I think what will cause that, and the thing to watch for that kind of thing is the bond auctions. Agreed. Watch the bond auctions. The last one was kind of ugly. So the bond market is what is going to force the government, your and my congressmen and senators, the people that we have elected to take care of our country, who have no interest whatsoever in curbing spending.
Yeah.
They don't understand what it's going to do. So there is no way that they are going to do it on their own. They will continue to spend, and this is both parties. It doesn't matter. Although I read one article that said both parties are guilty, it's just that Democrats are more joyful in doing it.
Gotcha.
But both parties are guilty.
Oh, for sure.
So what's going to stop it is the bond market. So when these auctions come out and the bond market says, no, we really don't want your bonds, we're not going to buy. What that results in is the yields going up, and the government not able to sell the bonds to fund all of that debt. Right? That's how they fund the debt, by selling bonds. So if nobody wants to buy the bonds because we have too much debt, what's the government going to do? They've got to stop. They have to stop spending.
Mm-hmm.
So that's the thing to watch. And that could play out over an extended period. I don't think that's something that's going to happen all of a sudden.
Yep.
There will come a point, there'll come a tipping point where it will happen all of a sudden. But it will take, I think, a few years still for that to play out. So when we get, 3 or 4 years down the line, then yes, I think we definitely could get a dot-com like or 2008 financial crisis. And then we'll have a very long extended period of a bear market, which is normal, secular bear market. It's happened, the last 100 years. I've talked about that before on this channel. I think we're coming to a major market top, more or less a financial reset. It's short-term, temporarily painful, but we need markets to reset. We need regular pullbacks and corrections in order for the market to keep going up. Well, right there, he said the market's going to keep going up. Right? I mean, did anybody read that sentence? They just gloss over it. It says, yeah, we need to have pullbacks. I've been saying that too. Yeah. Reset could also come with a recession. Yes. In fact, I think if the recession does occur, which it most likely will next year, probably sometime in Q1, okay, then that will not be good for the markets, and the markets will sell off, I think, pretty significantly, okay, in a recession. But again, I think it will be a cyclical bear market, not a secular bear market.
Right.
Industrial stocks in particular, we'll look at industrial stocks. We'll look at that sector in a second. Signaling a slowdown, sector has done well in recent months. Buyers of industrial goods typically upgrade their equipment at the end of an economic cycle due to huge delays between slowing business and orders for new machinery. That's true. They don't realize we're coming to the end of a growth cycle. I think they do realize that, and that they actually might be buying in anticipation of that before they don't have the funds to buy.
Maybe.
Okay. Music's about to stop. Industrial stocks have just continued to muscle their way higher. They're hitting all-time highs, and that is a signal that we're going to see these companies eventually start to slow down. All right, so economy has a 58% chance of tipping into recession by March of next year.
Oh, Q1, like you, okay.
That's what I think too. That's the latest estimate from the New York Fed.
Interesting.
50, I think it's more than 58%, but 58% is, better.
It's a pretty significant number, yeah.
Yeah, that's right. So I think that'll happen. I have a recession watch on my website, 3 things that I'm watching, and none of them have indicated a recession yet. But whenever they start to tip, it's usually about 3 to 6 months before the recession happens. So we'll continue to watch that. It's on my website for anybody that subscribes. They can look at it anytime, and it updates automatically. So you can see when any one of those 3 start to tip over. But I don't disagree with this either. So the only thing really in this whole article, with a headline of market headed for a hard reset that could take years to recover from, I don't see anything in here that says it'll take years to recover from. I see everything in here that says it's a normal market cycle that we're about to go through, which is what I've been saying anyway. So let's take a look at, first I want to show you this, which I showed before. This is the economy versus the market.
Right. And
it shows the sectors that perform better in each one of these. So the red line is the market. So think of that as a stock market. So I think, and this is just my opinion, this white one right here, I think we're somewhere right about here, just starting to roll over. And there's no time frame on this chart.
Right.
So this could be, 20 years. It could be 3 weeks. But it's usually about a year's worth, roughly. Because we go through.
Essentially, as a novice looking at this, the takeaway from this is the stock market is a forward or leading indicator. It reacts first in anticipation.
That's right. Exactly right. So the market is starting to roll over right here in anticipation of the recession over here. Right?
Got it. Yep.
So if the recession is a year from now and we're right here, so that's pretty much what I think will probably happen. Now, if you look at the sectors up here, materials, energy, and staples, those are the defensive sectors that usually start to do well at the market top, which is kind of what he said also. energy, staples, healthcare, and real estate over here, and then utilities and finance right here when the market starts to roll over. Okay. So I think we're probably somewhere in this area right now.
Okay.
So he said a late stage bull market, which is, you know, this would be the late stage bull market right there. All right, so now let's look at industrials.
Okay.
So this is from my website again. So I've got all the sectors and the industry groups inside the sectors. One thing to point out, and I actually put this in my newsletter this week.
It's amazing how much stuff you have here. Wow.
Yeah,
look at
it's a lot, and anybody that signs up, I would never expect them to go through all of this in one
I'm
sitting.
not sure they could. Yeah.
Yeah, I would just take it in little chunks and look at things as you're interested in different things. But these little indicators right here are updated every day. So every day I update which industry groups are moving up or down for the day. Okay, and you can see for Friday there were none that went down, even though the market sold off pretty well. But previous to that, during the previous week, you know, Wednesday especially, there were a ton of them that were red. But the important thing here is look at utilities. All 4 of the utilities industry groups were green on Friday. All of them. And here's industrials right here. So let's take a look at the chart for industrials first. This goes back 2 years. So in the article, he said, industrials have had a great run. Yes, they have. And they're starting to roll over. Yes, they are. So he's not wrong on that. If we go back 3 years, you can see right here, industrials basically were just going sideways up until basically the market bottom in October. And then started to take off from there. So they have had a really good run. It is time. I mean, go back to my video from last week about market cycles. There's the run up. The next thing is distribution. It's actually probably a little distribution right up here at the top. And now there's the downtrend. So accumulation, uptrend, distribution, downtrend. That's what markets do. So that's true. So industrials is rolling over. How about staples? Staples is another sector that is a defensive sector. So they, again, since October, and all the sectors look like this since October, by the way.
Yeah.
There's been a really good run in this uptrend. And now this was rolling over, but staples is starting to come back. So staples is a defensive sector. It's starting to come back. Utilities, probably the most defensive sector. It's definitely starting to move back higher. And it actually didn't really come down all that much. So all of these, healthcare. There's healthcare. This is a perfect example. Here's the uptrend. Here's the distribution phase. Now we're in the downtrend. Heading down.
I like it.
I read one article that said healthcare is great. It was probably right about here, right where it was hitting this high. They were saying healthcare is fantastic. It's going great. It's had a great year. It looks like it's going to continue its run. And I shorted healthcare right there.
Oh.
And
for you,
got out down here. So healthcare looks like it's ready to recover and start to move back up again. So, you know, what he's saying is not wrong. Here's technology. Technology is definitely rolled over. And this is where you can, a very good example of a bearish divergence. So here's, you know, the uptrend, it went up right here, higher highs and higher lows. Just like I said, that's what defines an uptrend. But momentum was moving down. And then we got higher highs and higher lows, but at a slower pace. But the momentum actually accelerated. So these divergences are forward looking. Everything else about technical analysis is backward looking because you have to wait for moving averages before it tells you anything. But divergences are very powerful.
Yeah.
So,
You have been bringing negative divergence to us for, I don't know, a couple of years now. It's an interest. The charts again allow you to kind of see it very visually, so we appreciate that.
right.
You've been calling this one for a while, so it's
Yeah.
just further evidence that you know what you're talking about.
Yeah. And so when will we know that it's done? So there's a significant support line right there that looks like we just broke through.
It
So we could
does.
continue down here to the 200-day moving average with technology. Would not be surprised for that to happen. But what I would love to see, and divergences don't always work, but you can see this little bear market, the cyclical bear market from last July until October,
Mm-hmm.
when it was hitting lower lows and lower highs, definition of a downtrend.
Yep.
And there's a little bullish divergence up here. And then you can actually see it down here even better. See that little bullish divergence? So as it was hitting lower lows, the momentum was running out.
Got it.
So it works both ways. Works on the downside as well as the upside. So it helps you to understand where the bottom really is, rather than jumping in. It hits here and goes up here, and you're like, oh, that's it. We're done. We're heading higher. And then you buy right there, and all of a sudden the rug gets pulled out.
So if I were to kind of step back, again, I sent you the article. You've taken us through kind of what everything looks at. It kind of sounds like for the most part, you agree with the long-term thesis, which is we're very likely to have a recession at the start of 2025. That will be bad for the stock market. Just kind of
Yes.
the gist.
Yes, I think so. I think
Okay.
the market is going to be choppy from now until the election.
Mm-hmm.
I think the next 2 months is probably going to be trending lower, and
Okay.
then it will start to trend higher, but it'll be choppy. It'll be up and
Got
down
it.
and up and down,
Okay.
but making higher highs, but not big higher highs. And then
Right.
after the election, it will take off. And then sometime in Q1, when it's really clear that the recession is about to happen,
Right.
then I think the whole market will start to decline. And usually markets decline pretty significantly in the start of a recession.
Yes.
But then somewhere in the middle of the recession, it starts to climb back up. So
Yeah.
again, if we go back, this is a really important chart to keep in mind. The difference between the economy and the market. So whenever you hear stories about what's happening with the economy, when you hear stories about the recession,
Mm-hmm.
and the market will have already hit the bottom,
Yep.
right?
Mm-hmm.
And people will say, oh, the recession is here and the recession is going to last. And, we might never get out of this recession, and we might never get back to normal.
Right.
And that when you hear that kind of news about the economy in mainstream media, know that the stock market is about ready to take off.
Exactly. Yeah. I love it. Well, one thing this audience can count on is you will keep showing up most Sundays, even get some special Wednesday editions when there's market moving stuff, which we always appreciate. Dan, you're amazing. You have a website and a newsletter. Show that one more time.
Sure. breakpointtrading.net. It's got a free newsletter right there. It's got an little earnings button if you want to see what earnings are coming up. And then this is since the 2009 bottom. That's what the markets look like since the end of the secular bear market, basically. And you can see, and I showed this before too, you can see we were almost right back to the top of that channel.
Mm-hmm.
So now we're rolling over from the channel. So we're probably going to come back. We could come back down to this 50. This is a weekly chart. So it's a 50-week or a 200-day moving average.
Got it.
So it could come back down there, which is about 46.50.
Very cool.
I'm not saying it will. I'm just saying it would be normal for it to.
I love it. I love the fact that we come back each Sunday. We talk about the first video, what's happening in the market. Second video, we try to give some education. We respond to articles. Dan, you are amazing. The audience loves you. Have a great week.
Have a good weekend. Take care.
Thank you.